Before there was Bitcoin, before the dot-com boom, before Wall Street knew the term too big to fail, there was the Mississippi Bubble, a financial scheme so audacious it nearly brought an empire to its knees. And at the center of it all, a charming, dangerous Scotsman named John Law. This is the story of how one man, driven by vision and vanity, manipulated trust, currency, and speculation to create one of the most infamous economic collapses in history. It's a cautionary tale, a tragedy, and perhaps a blueprint for everything that came after. Born in Edinburgh in 1671, John Law was the son of a goldsmith and banker. Brilliant with numbers, he was a natural mathematician and an early advocate of monetary theory. But he also had a wild side: gambling, womanizing, risk. He was imprisoned in London for killing a man in a duel and escaped to the continent, where he mingled with the elite, gambling his way across Europe's salons and courts. But Law wasn't just another aristocratic scoundrel. He had ideas, big ones. He believed that a nation's economy could be stimulated by controlling its money supply. He proposed that paper money, if properly managed, could outperform gold and silver. To monarchs drowning in war debts, Law's theory was like a lifeline. And no monarch was drowning more than France. By the early 18th century, France was financially crippled. The son, King Louis XIV, had left the nation deeply indebted. Taxes were high, the economy stagnant. His successor, the 5-year-old Louis XV, left the reins of power to the Duke of Orleans, who was open to radical ideas. Enter John Law. In 1716, Law was granted permission to open the Banque Générale, a private bank that could issue paper notes backed by coin. This was revolutionary. Until then, currency was metal: gold, silver, copper, tangible. Law introduced the concept of paper money tied to confidence, not coin. At first it worked brilliantly. The bank's notes were accepted and commerce picked up. Merchants loved the liquidity. Trade increased. The French economy began to stir. Law became a darling of the court, a financial magician. But he wasn't done. In 1717, Law acquired the Mississippi Company, which held trading rights in French Louisiana. The territory, vast, undeveloped, mysterious, was sold as a promised land of wealth and resources. Law merged it with other monopolies, creating the Company of the West. He offered shares to the public, payable in government debt. The public, eager to convert near-worthless bonds into stock in a golden land, jumped in. Demand exploded. Shares rose from 500 livres to over 10,000. Frenzy gripped Paris. Everyone, from aristocrats to servants, rushed to buy Mississippi stock. John Law became the most powerful man in France. He was made Comptroller General of Finances in 1720, effectively the finance minister of an empire. The Mississippi Company took over France's tax collection, tobacco trade, slave trade, and more. Law's vision of tying the central bank to a national trading monopoly was complete. Paper money was everywhere. France, on the surface, looked richer than ever. Paris became a circus of speculation. Shareholders built mansions, wore silks, threw lavish parties. The Rue Quincampoix, where the stock was traded, turned into a chaotic marketplace of shouting, bribing, and fortune-making. People sold farms, jewels, dowries to buy Mississippi shares. Foreigners flocked to Paris to get in on the boom. Goldsmiths became stockbrokers. Servants became millionaires. And John Law? He was the king behind it all. But the wealth was paper. The profits, theoretical. The company's assets were vague promises tied to a land filled with swamps and fever. Law, to support share prices and public confidence, kept issuing more banknotes. He printed money to buy more stock. A feedback loop was forming. Behind the scenes, cracks appeared. There was no way the company's earnings matched its valuation, but as long as people believed, the system kept running. In early 1720, signs of trouble emerged. Some investors tried to cash out, exchanging paper notes for gold and silver. The bank, overwhelmed, couldn't meet the demand. Law responded by restricting withdrawals. He even banned the use of gold and silver altogether. Paper was now the only legal tender. Confidence wavered. Inflation soared, bread prices climbed, panic spread, riots broke out. Law's carriages were attacked in the streets. Rumors of bank insolvency turned into headlines. He attempted to devalue the shares, then revalue them, flip-flopping in policy. None of it worked. The bubble burst. The stock price crashed. The Banca Royale, as it had been renamed, couldn't support the paper notes in circulation. Fortunes evaporated overnight. The public, once enchanted, turned on Law with fury. By the end of 1720, John Law's empire was rubble. He resigned from his posts and fled Paris under disguise, fearing for his life. He wandered Europe penniless, shunned by the elites who once celebrated him. He died in Venice in 1729, working as a lowly gambler once again. In his wake, France was devastated. The national debt remained. Trust in paper money collapsed for generations. Many believed the entire idea of a central bank was poisoned. And yet many of Law's ideas outlived him. What makes the Mississippi bubble so haunting is how modern it feels. A charismatic founder, a revolutionary technology, paper money, a monopoly dressed as innovation, a speculative frenzy, a market disconnected from reality, and the final crash, inevitable and total. You can see shadows of Law in the 2008 financial crisis and the crypto boom in meme stocks. He was the prototype of the visionary founder who believed in trust over substance. He didn't set out to defraud, but his belief in theory over fact turned faith into folly. The Mississippi bubble is more than history, it's prophecy. John Law may have been one of the greatest economic minds of his age. He foresaw ideas like fiat money, central banking, and monetary policy. But his failure was one of human nature, of overreach, arrogance, and a blind faith in belief over reality. The Mississippi bubble is a parable of how financial systems are built on trust and how quickly that trust can vanish. At the edge of every booming market, of every new era of money, Law's ghost lingers. And maybe, just maybe, we haven't learned a thing.